Welcome back to the deep dive, everybody, where we do a deep dive.
Into a whole bunch of stuff.
Yeah, no, a whole bunch of stuff. And I think our listeners know why they're here.
They want to make sense of it all.
Right. They want to kind of cut through the noise.
All the information.
All the information and, all the hot takes and all the stuff that's constantly like bombarding you and get to what really matters.
Absolutely.
And today, we've got a really interesting
Set of topics to discuss.
Yeah, we're going to be talking about like some weird stuff that's happening in the markets, particularly in crypto right now. And we're going to be looking at kind of the effects of global trade and then this AI stuff that's like
Just moving so quick.
just moving so fast. It's like hard to keep up.
Absolutely. And you've provided me with a fascinating set of information here.
Yeah.
One of the main sources we'll be looking at today is a recent analysis from a YouTube channel called Invest Answers.
Okay.
It's titled Fry Fire, Record Fear and BTC Now Risk Off.
Fire.
Yeah, Friday Fire.
All right, cool. So
The goal really is to kind of take all of this data,
mm-hmm.
synthesize it, extract those key insights, connect the dots in a meaningful way.
Right.
And provide the listeners with a clear understanding of what's happening.
Yeah.
But without
overwhelming them.
Exactly.
Yeah.
We want to avoid information overload.
Absolutely. So let's get into it. One of the things that really struck me is like this idea of risk-off assets.
Right.
And how they're kind of behaving not the way that we would traditionally expect them to.
Right.
Right. So, normally when markets get a little shaky, people rush towards things like gold.
Right. The traditional safe havens.
Yeah, or government bonds, just things that are seen as like
Steady.
really safe and steady.
Yeah, low risk.
Yeah, but what we're seeing now is kind of challenging that.
Totally. And I think the Invest Answers analysis really highlights this nicely.
Okay.
They talk about this divergence in market sentiment as reflected by the fear and greed indices. So, the crypto market's fear and greed index is currently sitting at 25.
Okay.
Down from 44.
Okay. So that indicates like
So it's down. So that kind of suggests
fear.
some caution, some fear.
Yeah.
Right. But then when you look at the stock market,
okay.
it's showing extreme fear.
Really?
It's registering a score of 4.
Oh, wow. That's like
which is
really low.
Historically low.
Wow. Okay.
So you've got this situation where, traditional markets are really showing a lot of fear.
Yeah.
And yet Bitcoin
yeah.
and certain altcoins and some companies in this space are actually performing pretty well.
So is this where we start to see like this decoupling?
Yeah,
like where Bitcoin and crypto maybe are no longer
tied to the hip.
Yeah, exactly.
The traditional markets.
Yeah, so like when the S&P 500 goes down, Bitcoin doesn't automatically go down with it.
Exactly. And the analysis points out that on a day when the Mag 7, those big tech stocks,
yeah.
And the broader S&P were down.
Yeah.
Bitcoin was actually up.
Really
Solana was up 6%.
Yeah.
MicroStrategy was up 4%.
That's fascinating.
So it does raise the question, could Bitcoin in certain parts of the crypto market be starting to be viewed as like
safe haven?
A safe haven in a way?
Yeah.
It's really interesting. And perhaps, factors like, the increasing institutional adoption
right.
that we're seeing, or Bitcoin's fixed supply narrative in an inflationary environment.
Right.
Those things could be playing a role in this.
In this kind of shift of how people see it.
Yeah.
Yeah, that's really interesting. So let's shift gears a little bit and talk about stablecoins.
Sure.
This is another area where there seems to be like some pretty big developments happening, particularly with their integration into the traditional banking system.
Yeah, and the Invest Answers analysis, points out this reported stance from the SEC.
Okay.
Where they're suggesting that covered stablecoins like Tether and USDC may not actually need to register for minting and redemption.
Interesting. Okay, so for our listeners who maybe aren't super familiar with all this jargon, can you just give us a quick definition of what a stablecoin is?
Yeah, so a stablecoin is basically a cryptocurrency.
Okay.
That's designed to maintain a stable value.
Right.
So it's usually pegged to a traditional currency like the US dollar.
So like one USDC is always worth $1.
Exactly. So it kind of takes out that volatility
right.
that you see with something like Bitcoin.
Okay, got it.
So this regulatory clarity that the SEC is suggesting could be huge.
Yeah, why is that?
Well, the analysis suggests that this could open the door for banks to really get involved in the stablecoin market.
Okay.
And that could be a real game changer.
So how, so,
Think about it. We're seeing this increasing digitization of the global economy,
right.
right?
Right.
The source even uses the term tokenization of everything.
Okay.
And, with the AI revolution that we're in the midst of, this integration of stablecoins into traditional banking could be like a key step
Okay.
in making all of that happen seamlessly.
Gotcha. So it's not just about like banks making money off of stablecoins. It's about like this bigger.
It's about how it's going to change the way we interact with money in general.
Yeah, like our everyday lives.
Exactly.
Okay. And speaking of like real world applications of all of this, there's this partnership that Binance and
Yeah.
Circle announced
Binance.
with Binance Pay, right? And I mean, Binance is this like
Huge platform.
they call it the financial soup app, right?
Yeah. 250 million users.
250 million users. That's insane.
It's massive.
And then Binance Pay has like 40 million monthly active users.
Right.
So this seems like a pretty big deal for dollar-backed stablecoins.
It is. I mean, it essentially gives them access to this huge established user base.
Right.
And it allows those users to use stablecoins for like everyday things.
Right, like sending money to friends.
Exactly. Peer-to-peer payments.
Paying at stores.
Yeah, making purchases with merchants, all sorts of stuff.
So it's really like integrating them into...
The real economy.
Yeah,
Which
exactly.
is really exciting.
Yeah. Okay, so let's move on now to kind of this global market turmoil that we're seeing. The analysis paints kind of a scary picture.
It does.
With markets all over the place, like really struggling. They mentioned Vietnam specifically.
Yeah, they had some pretty dramatic drops, 7% in a single day.
Wow.
After already falling 6% the day before.
Oh, wow. So it's just...
So a pretty sharp downturn.
Yeah.
And there were significant drops in South Africa as well.
Okay.
And they mentioned 17 European markets were also down.
Oh, wow. So this is like a...
It's a global phenomenon.
Yeah, this isn't just like a one-off thing.
No, it seems to be pretty widespread.
Okay. But they mentioned that Pakistan seems to be doing okay.
Yeah, that's interesting, is that?
It is, and they speculate that it could be because they don't do a lot of trade with the U.S., and they don't have a lot of tariffs with the U.S.
Potentially.
So this kind of leads into this whole conversation about tariffs.
Yeah.
Which the Invest Answers analysis really points to as a primary driver of these global market shifts.
Absolutely.
And, there are some pretty strong opinions about tariffs in this analysis.
Oh, yeah?
Dan Ives is quoted as calling them a self-inflicted economic Armageddon.
Which is a pretty strong statement.
Yeah. But then, there's also this idea that, sometimes you got to break a few eggs to make an omelet.
To make an omelet.
Right. And that, sometimes these things are necessary for long-term fairness.
Yeah, it's a really interesting debate, and it highlights the different perspectives on trade policy.
Yeah.
On one hand, you have the immediate economic pain and disruption that tariffs can cause.
Right, like businesses are having to pay more.
Checks
Consumers might be paying more.
Yeah.
It can even trigger retaliatory tariffs from other countries.
Absolutely.
But then on the other hand, the argument is that, sometimes tariffs are needed to address trade imbalances.
Right.
And to level the playing field.
Yeah, to protect domestic industries.
Yeah.
The source points out that reciprocal tariffs in the U.S. right now are at levels not seen since the 1930s.
Wow.
Which is pretty significant.
Yeah, and they say that the average U.S. tariff is now exceeding like 25%.
Right. So it's a substantial impact.
Yeah. But then, we also hear from Bill Weimers in the analysis, who has a different perspective.
Yeah.
He says that, while money managers with like a short-term outlook might be freaking out, retail investors
who are maybe thinking longer term.
Yeah, who can, weather a 12-week storm.
Exactly.
Might actually see this as an opportunity.
As a stacking opportunity, as he calls it.
Right. So like a chance to kind of buy things.
At a discount.
At a discount.
When the price is low.
Yeah. Okay, and this kind of aligns with what the U.S. president said in the analysis, right?
Yes, where he's talking about all this investor inflow.
Right.
And he basically says, my policies are not changing.
Yeah, he says they will never change.
Right. So he's very much committed
to this approach. Yeah. Okay. And it sounds like maybe we are starting to see some of those omelet ingredients come together.
Potentially.
The analysis mentions that Argentina has become the first zero tariff partner with the U.S.
Right.
And they say that Vietnam is also moving towards eliminating tariffs on American goods.
Right.
Which they say could be really good for companies like Nike.
Absolutely. They have a lot of manufacturing in Vietnam.
Right.
So lower tariffs there would mean lower costs for them.
Yeah. Okay, so what about China?
Well, that's a big question.
Yeah.
Um, the analysis lays out kind of three potential paths forward for China.
Okay.
They could concede to U.S. trade terms.
Okay.
They could devalue the yuan.
Okay.
Or they could implement a massive fiscal stimulus program.
Okay. And so the stimulus would be like to kind of offset.
Yeah, to kind of prop up their economy
Yeah.
in the face of these tariffs.
And they're talking about like a huge stimulus.
Oh, yeah, potentially trillions of dollars.
Trillions with a T.
Yeah.
Wow. Okay. So which path do you think they're going to take?
Well, the analyst predicts that it'll probably be a combination of all three.
Okay.
But they also stress the importance of dialogue
Right.
between the U.S. and China
Yeah.
to really come to some sort of
A fair
agreement.
Yeah. Okay. So let's shift gears again a little bit and talk about easing rate expectations
Sure.
and what that means for treasury yields.
Okay.
This is something that, can really affect people's, wallets.
Absolutely. It affects things like mortgages, car loans,
Yeah.
all sorts of borrowing.
Yeah. Okay. So what's the latest?
Well, it looks like forecasts are now suggesting that we could see 4 rate cuts this year,
Wow.
totaling 100 basis points.
Okay.
And this would likely happen by December.
Okay. So if that happens, what does that mean for like the average person?
Well, if rates are cut, that generally means that borrowing becomes cheaper.
Okay.
So you could see lower interest rates on your mortgage,
Okay.
your car
Okay.
loan, things like that.
So that's good news.
It could be good news for borrowers.
Yeah.
And we're already seeing some movement in that direction.
Okay.
The 10-year Treasury yield has fallen below 4%
Okay.
for the first time since October.
And so how does that connect to like mortgage rates and things?
Well, typically when the 10-year Treasury yield goes down,
Yeah.
long-term interest rates also tend to go down,
Okay.
including mortgage rates.
Okay.
So the analysis suggests that we could see mortgage rates falling to maybe the 6.4 to 6.5% range,
Okay.
which is down from around 7.1% just a week ago.
Wow. So that could be a big help for people who are,
Looking to buy a house.
yeah, or even just refinance their existing mortgage.
Absolutely.
Yeah. Okay. Let's talk a little bit about Tesla and their full self-driving
FSD.
FSD. Yeah. They're making some pretty interesting moves in that area.
Yeah, they've just launched their FSD supervised early access program in the U.S.
Okay.
And the analysis kind of sees this as a step towards
Robotaxis?
robotaxis.
Yeah. Like widespread rollout?
Exactly.
Okay.
And they're starting by giving access to their best previous beta users.
Okay. So it's still,
It's a controlled rollout.
yeah, very controlled.
Yeah.
Okay. I've heard a lot of different opinions about FSD.
Me too.
Some people are like, it's amazing, it's going to change the world. And other people are like, it's never going to work.
Right. It's dangerous.
Yeah.
Yeah. There's definitely a wide range of views on it.
But the analysts actually shared a pretty compelling story about their own experience with FSD.
Yeah.
They were talking about driving hundreds of miles at night in various conditions.
Right.
And basically the car was doing most of the driving.
Yeah.
So that's pretty impressive.
It is. And it's interesting to hear those firsthand accounts because it gives you a different perspective.
Than just reading about it.
Exactly.
Yeah. Okay. So we've been talking a lot about tariffs and how they're affecting different industries.
Right.
But the analysis actually suggests that Tesla might be in a pretty good position
Yeah, they're not as vulnerable to tariffs.
because of how localized their production is.
Exactly.
They're saying that in China, Germany, and the U.S.,
Yeah.
Tesla's localization rate is over 95%.
Which is huge.
Yeah.
I mean, that
Yeah.
means that they're sourcing most of their parts
Right.
and doing most of their assembly.
In the countries where they're selling the cars.
Exactly.
So they're not having to import stuff
right.
and pay tariffs.
And get hit by those tariffs.
Yeah. Okay. So this was probably like a deliberate strategy.
Well, I'm sure it was.
Yeah.
It's a smart move by Tesla.
Yeah.
I mean, it not only helps them with tariffs,
Yeah.
but it also makes their supply chain more efficient.
Right.
It helps them manage costs.
Yeah.
And it allows them to be more responsive to local market demands.
So it's like a win-win-win.
Yeah, it's a really strategic move.
Okay. Let's talk about AI.
Right.
This is something that is just like moving so fast.
Unbelievable.
It's crazy. And the projections that are coming out from this group of PhDs called AI 2027
Right.
are like straight out of science fiction.
They are pretty mind-blowing.
Yeah. So they're talking about this concept of exponential progress
Right.
in AI research and development.
Right, which means that the rate of advancement is constantly accelerating.
Right. It's not linear.
Exactly.
It's like a hockey stick.
Yeah, it's exponential.
Yeah. Okay. So what kind of timeline are they looking at?
Well, by early 2027,
Okay.
maybe even late 2026.
Okay. So like a year or two from.
Yeah.
Okay.
They're predicting what they call an AI R&D multiplier of 4x.
Okay. What does that mean?
So essentially it means that AI will be able to accelerate its own development
Okay.
at 4 times the current rate.
Oh.
So it's basically AI designing better AI.
So we're talking about like AI doing the research and development.
Exactly.
Okay.
And around the same time, they're also predicting the emergence of what they call superhuman coders.
So like AI that can code better than humans?
Yeah, across the board.
Wow. That seems like that would have huge implications
Oh, absolutely.
for like the entire tech industry.
Yeah, I mean, you think about it, software development
Yeah.
would be completely revolutionized.
Yeah. Okay, so that's like a year or two from now, and then what?
Well, by 2027,
Okay.
they're saying that the AI R&D multiplier jumps to 100x.
100.
100
So like 25 times faster.
than what we're talking about just a year earlier.
Wow, that's insane.
It is.
Okay, and what else is happening in 2027?
Well, in addition to that 100x multiplier,
Yeah.
they're also predicting the arrival of the superhuman remote worker.
Okay, so like an AI that can do
Any task that a remote worker could do,
Yeah.
but 100 times better.
Wow.
So think about all the jobs that could be impacted by that.
Yeah, that's like a whole other conversation.
It is.
But okay, so that's 2027, and then
And then later in 2027,
oh wow.
they're predicting ASI,
Sorry.
artificial superintelligence.
And that's where like the AI becomes smarter than us
Yeah, that's where AI exceeds human intelligence
in everything.
across all domains.
Wow, okay. I mean, these are just predictions, right?
They are projections
Yeah.
based on current trends.
So they could be wrong.
They could be wrong.
Yeah, but even if they're like partially right,
Right.
this is moving really fast.
It is incredibly fast.
Okay. And this kind of leads into the Tesla Optimus bot,
Yeah.
which is another thing that's just like, whoa.
It's mind-boggling.
Yeah. So they're developing this humanoid robot,
Right.
but they're doing it very secretly.
Yeah, very hush-hush.
Yeah, which I guess makes sense.
I mean, they don't want their competitors.
To steal their ideas.
Exactly.
Okay. But what do we know about it?
Well, we know that they're planning to deploy a lot of them.
Okay.
5,000 units this year.
5,000.
Yeah, within the next 6 months.
Okay.
And then 50,000 next year.
50,000 robots.
Yeah.
Wow.
It's a huge number.
Yeah. Okay. So, and these robots are going to be equipped
Advanced AI,
through
Grok, and XAI.
Grok and XAI, and they're going to be connected to like
All the information on X,
all the information on Twitter.
formerly Twitter.
Right. So, like, what are they going to be able to do?
Well, the analysis suggests that they could be used for all sorts of things,
Like,
mowing lawns,
okay.
cleaning,
Well, that's
security
cheap.
monitoring,
Right.
guarding,
So, like a robot security guard.
potentially.
Wow.
And, as the AI gets more advanced,
Yeah.
who knows what they'll be able to do.
That is both exciting and terrifying at the same time.
It is. It's the future.
Yeah. Okay. So we've covered a lot of ground today.
We have.
We talked about these potential shifts in market risk perception. We talked about the growing role of stablecoins.
And their integration into traditional finance.
Yeah. We talked about the whole complex world of global trade.
And tariffs.
Yeah. And then we went deep into AI.
And robotics.
Yeah. And I mean, all of this stuff is happening so fast.
It is. It's mind-blowing.
It's crazy. And it presents both like enormous opportunities
Yeah.
and some pretty big challenges.
Absolutely.
So, as we wrap up here, I want to leave you with a thought.
Okay.
Of all the things we talked about today, what do you think is going to have the biggest impact on your life in the next few years? Is it going to be the changing crypto landscape?
Yeah.
Is it going to be these global trade wars? Is it going to be this AI explosion? Or is it going to be these robots that are coming?
It's a tough question
It is.
because they're all so interconnected,
Yeah.
but it's a question worth asking.
Yeah. And, once you've kind of figured out what you think is going to have the biggest impact,
All right.
what are you going to do about it?
How are you to prepare?
Yeah. How are you going to prepare yourself for this future that's coming at us so fast?
It's a good question for everyone to ponder.
Yeah. Thanks for joining us for this deep dive, everyone.
Absolutely.
We'll see you next time.
See you later.